Hey there, welcome back to the Rekt Capital channel and welcome to this video about the downside deviation in Bitcoin's price action that we're currently seeing actually recover a bit. And we're going to be talking about this downside deviation in a lot of detail in today's video. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So this has been a cycle of reaccumulation ranges, and in the past we've seen downside deviation below these reaccumulation ranges in the form of downside wicking, and of course we've seen pullbacks which were a little bit shallower in the earlier portions of the cycle. But then we saw a 32% pullback, and we're seeing a 30% pullback right now as well. So even though these were downside deviations in the form of downside wicking, as a result of shallower pullbacks, we're now seeing deeper pullbacks, and as a result, we're seeing candle-bodied clusters of price action develop below reaccumulation ranges, and we're seeing a very similar cluster develop right now. In fact, the downside deviation here is of similar magnitude to the post-halving reaccumulation range breakdown from around the post-halving period, 17% and 18% magnitude, very similar here. And what Bitcoin is going to try and do is actually reverse towards the upside in an effort to reclaim 93.5k so that I can actually resynchronize with this reaccumulation range and get back on track. And this is effectively what we've tried to do and did successfully back here in the post-halving period. We'd break back into the range, lose it, briefly crash again, reclaim, lose it, and then finally manage to reclaim with a post-breakout retest attempt, which was successful, and then rally higher. So price is going to try and build upon this momentum to get back to 93.5k. And one of the things to get to that 93.5k region would be to break out from this consolidation zone that we have here between the two bull market EMAs. The green one is the 21-week EMA, and this purple one is the 50-week EMA. And back in March 17th, so a few days ago, I spoke about how this was quite similar to this right over here, whereby we also lost the 21-week EMA right over here, dropped into the 50 EMA, and generally just consolidated between these two moving averages. And we're seeing a similar situation back here. Of course, this isn't exactly just like this portion of price action. I spoke about that in a lot of detail in the newsletter, so I'm not going to really go into that in too much detail. This effectively was the second price discovery correction, whereas in 2021 this was the first price discovery correction, which is more similar to this period because this is technically the first price discovery correction, and that actually translates to this corrective period rather than this one. However, for the intents and purposes of this being a very similar topping out structure, local top right over here, to transition us into this EMA triangular market structure, well, then that's a very similar predicament, but it's not picture perfect exactly the same thing. And to break out to 93.5k to reclaim that reaccumulation range low above, price would need to see a weekly close and post breakout retest above the 21-week EMA and turn it into support. So that's exactly what we need to see. Going forward, price would need to weekly close above here and turn 88.5k into a new support. So weekly close above this moving average, turning it into support, and then that would effectively enable trend continuation towards the upside closer to 93.5k. This is a really key confirmation signal that got price not only to retest this green 21-week EMA as support in the short term, but also was enabling an upside move to retest it more in the midterm as well before rallying higher. So we could see a short-term retest here to get us into 93.5k. Maybe we reject from there in the short term and then drop back into the 21-week EMA to retest it and then rally higher to resynchronize with the range. That's a scenario if we were to copy paste effectively 2021 in that same vein. So we know that 88.5k, that's going to be the key level that we need to reclaim as a support to get us to 93.5k. And until then, we're just going to be consolidating in between these two EMAs. So for the betterment of this bullish trend, it would be great if Bitcoin can reclaim 88.5k sooner rather than later, because if it does reject from here in the more immediate term, then we're probably going to continue to consolidate and bounce about between these two bull market EMAs. Very similar to what we've seen back here. Of course, in 2021, we saw a lot of downside deviation below the 50 EMA, but we really haven't seen any of that downside deviation around here. In fact, this was a picture perfect retest of the 50 EMA as support. And so we're probably going to be maintaining these levels right over here for the time being. But when it comes to the daily time frame, we've managed to reclaim the late February lows, and we're trying to retest them into new support. So this was a old resistance, as we can see back over here, and now we've broken back not only above this late February resistance, trying to turn it into a new support, but we've also broken back above the 200 EMA effectively. That's a long-term gauge of investor sentiment. Whenever price is above the 200 EMA, that effectively means that long-term investors are bullish on Bitcoin, and whenever it's below it, then they're bearish on Bitcoin. So it's a great long-term investor sentiment gauge, and the 200 EMA is now being retested into support as we speak, and this could be a volatile retest even into as low as 84k, because that's effectively the level that we're trying to reclaim on this current post-breakout retest right now. And what's interesting about this entire period right now is that this has been a downtrend on the RSI, a daily downtrend dating back to really late mid-November 2024. So breaking this downtrend is pretty pivotal, because it means that the RSI doesn't want to be trending downwards anymore, and this is actually very likely a hidden sign of emerging strength in Bitcoin's price action, because now the RSI wants to enter a new macro uptrend after downtrending for effectively some 5 months or so. And now we are seeing the RSI try to confirm this breakout and breach of the downtrend so that it can rally higher. And this comes on the heels of really just price action building a bullish divergence. So back in March 10th, I spoke about how we were having lower lows on the price action, higher lows in the RSI. That's a typical bullish divergence. So really important hidden strength emerging in the price action, and we've seen that this has translated into a bit of upside, but it's not just this bullish divergence that we've seen translate into upside. So we've effectively rallied from 82k since that tweet to 86.5k really, and that bullish divergence is playing out. But in terms of the macro, what's going on overall is that we are generally in a period of overselling. There's been way too much selling in the market, and now it's going to be very interesting for buyers to start stepping in, because we're seeing declining sell side interest, and we've even dropped into some really historically low RSI levels on this crash into the 70s. And so really we are in a period of overselling, tremendous overselling, which has transitioned into a bullish divergence. And every time throughout the cycle that we've dropped into this oversold region, into the sub 25 RSI, we'd see a trend reversal towards the upside. And so we're slowly seeing Bitcoin gain, not just in this bullish divergence that we're seeing slowly play out, but we're also seeing the daily downtrend dating back to November 2024 also get breached. Slowly we're seeing emerging strength come back into the market. A long-term gauge of investor sentiment is also being reclaimed as we speak. And generally when it comes to these trends, we need to watch out for further continuation, which is going to be reclaiming 88.5k to get us back closer and closer to reclaiming this reaccumulation range. And many people have been talking about this being a bear market, but it does look like it is a downside deviation period, very similar to what we've seen back in the past. Obviously these downside deviation periods are changing across time, but it's really important to look at the charts in a level-headed manner and try and look at it in an unbiased way and not scream bear market whenever we see a pullback that is actually very similar to the one we saw here. This was a 32% pullback, this was a 30% pullback, so very similar downside deviation in that regard, but really important to keep level-headed and look at the data, look at the charts and zoom out when in doubt. And of course, if you do need guidance and you need help with navigating the market, I'm more than happy to help out. Feel free to book a call with me if you want. There aren't many slots there, really. Limited slots. I'm only going to take 3 calls, really. So if you're really committed to learning and want to seriously put some time and effort to improving your investing and improving your strategies, having a bit of guidance and just understanding what's going on in the market, feel free to book a call with me. I'd be more than happy to help out. But of course, it's not for free. Like my YouTube videos, like my tweets, like my free newsletter, I do only work with a very select few people. So if that's you, feel free to book a call, but don't book a call if you think it's going to be a get rich quick scheme. What I want to do is actually teach a skill set that's going to help you over the course of not just this remainder of the cycle, which comes around every 4 years, but also teach you a skill set that's going to carry you forward over the next cycles and beyond. But having said that, that's about it for today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.